I'm Gigi Sukin with Colorado Biz Magazine. We are at UMB Bank today, and we get to spend some time with Casey Mathews. He's the Chief Investment Officer at UMB. Casey, can you give us a brief wrap-up or recap of the second quarter for 2015?
Even though the economy in the U.S. rebounded quite nicely in the second quarter, corporate profits continue to struggle. When you look at corporate earnings in the second quarter year over year, they declined about 2.5%. And sales growth fell even more than that, down a little bit more than 4%. Now, this was the first negative quarter that we've experienced since the second quarter of 2009. Now, this was primarily due to the severe contraction in earnings in energy companies. The energy space was hit hard over the last 12 months, and we knew this was coming. In addition, corporate industrial conglomerates got hit hard as well. These companies would send their goods and services overseas, and of course, because of the strong dollar, the costs of their goods and services became more expensive to foreign buyers, causing some softness in their earnings in the quarter.
Talk to me a little bit about some of the other industries that are affected or pieces of the economy that you're keeping an eye on right now.
Well, there's always pros and cons to a strong dollar, or low interest rates, or things like that. So as I mentioned, that we've seen a strong dollar, and I would anticipate that the dollar would continue to be strong for a couple of reasons. One, the dollar is based on relative economic strength, so our economy actually is growing quite nicely, especially when you take out a few of the first quarters that have been soft due to more transitory issues such as weather or the West Coast port closings. So if you take that out, our economy is growing something like 2.5% for the last 5 years. Not all bad. So the dollar will remain strong, interest rates are low, again supporting a strong dollar, but that has a lot to do then with commodity prices. A strong dollar is negatively correlated with commodity prices. So oil's been going down, we all know that every time we stop and get fuel for our automobiles. But in addition, when you look at soft commodities like wheat and corn, base metals, nickel, copper, things like that, they've all come down in prices. Well, when we consume soft commodities with our breakfast cereals or other breads and grains, things like that, our costs are going to go down. So all these costs go down to the consumer. We're putting less of our savings or our earnings into our gas tank, and that will be very, very positive for the consumer, and I think will be very good for the consumer discretionary space and those stocks there.